Hello everybody and welcome back to another video once again. As requested, I'm just going to do a trade breakdown and it's going to be on euro to the US dollar. So this is Forex, and me personally, I think that Forex is better for day trading, and doesn't mean that I'm wrong or right. It's just my personal opinion. Um, so yeah, let's just jump right into it. Okay, so first of all, we want to look at the higher time frames. Because like I've mentioned before, the higher time frames tell you what's going on, right? Okay, so 4 hour, we're very bearish. You can see we've just been moving down. And then we get this change of character here. So what is a change of character? Right. It is literally the last buy candle before the sell move that put in the most recent low. So as you can see here, this is the last buy candle that put in the most recent low. So when this is broken on the 4 hour, it is an indication that price could actually start to make a retracement. So we'd literally be making a retracement to meet a higher time frame point of interest and then go ahead and put a lower low. So that is the 4 hour. So I'm going to drop down to the 15 minute and locate some demand zones in this leg of price that created the 4 hour change character. Okay, so I had my extreme zone marked down here. Would be the extreme. So this probably isn't the extreme. There's another zone here, but it's not too clean, so I haven't marked it out. I like to see nice clean imbalance before my zones. So I had this zone marked out, and then I had this one also marked out. And what I did was when price made a new leg, I pulled the Fibonacci tool and measure the 0.5. So as you can see, I just got the 0.5 selected. And this tells us if price is in premium or discount. So you only really want to sell in discount and you only want to sell in premium and then you want to buy in discount. Well, if it's around the 50%, then it's fair price. It's pretty even. So if you get the confirmations, you can still scale in for a buy. Okay, so my points of interest are the last sell candle before the buy that left imbalance. Okay, so what's imbalance? I'm just going to mark it out here. It's an area where the wicks don't meet. It's an area of price where the wicks don't meet. Okay, so this area here has got imbalance. And what does it mean? It means that the banks have got involved. They've put a load of money in, causing this much volatility that there's no wicks in here at all because there was too much buying power. Okay. So this could be a zone here, but the reason for me not picking this zone is because a lot of people are going to be buying from this zone. And when there's a zone just below with imbalance, this is inducement. So what is inducement? It is literally enticing people to buy. These banks, they know where people are going to have their stop losses. And if everyone's interested in this zone here, their stop losses are going to be just below. So that is inducement, uh, also known as liquidity, whatever. So I'm just going to go over liquidity. So what is liquidity? Because it is essential in these markets to understand liquidity, where liquidity may be lying. So liquidity is simply money in the market. And where would there be money in the market? Well, where people's stop losses are. That's where the money would be located in the market, right? So people trade all different styles, trend lines, support and resistance, and the banks are aware of these things, right? So here you can see there is liquidity, right? Because retail traders are probably looking at this and saying, okay, well, this is actually a nice area of resistance. Price taps in, meaning it must be strong. This is a retail mindset, by the way. This is not how I'm viewing the market. So it'd be like, oh yeah, This is a strong level. They'll probably be looking for shorts here, or triple top, whatever they want to call it. And then what happens, right? It gets spiked, and then it reverses. So it's very interesting, and we see this a lot. Like, what do we see here? I'm just going to go ahead and delete this to make it cleaner. Double tops or resistance building up. Liquidity. What happens? Spike it. We sweep the liquidity. So that's just something to be aware of. Okay, so let's just jump into it now. We take out this inducement and then we tap into our zone here. So on the 4 hour, just to recap, we've had a change of character, and then we've had our 15-minute zone here that caused a change of character. It was in the 50% of the swing, so it means it was good pricing. And where would we target? We would target this week high, right? So we tap in, and then we get a further 15-minute change of character, right? So the 15-minute has switched here from bearish to bullish, right? And then we leave behind another 15-minute demand zone. Okay. So this is where this demand zone is where I'll be looking to take a trade. And literally the same thing happens, right? The same thing that I just mentioned. We get this zone here, just above this zone here. So what is that? How am I viewing this? Well, that's inducement, because people are going to be looking at this area to buy, and there's a zone just below. So it makes sense. It's more probable that price is going to come down into this level, and then we're going to see if we can get a trade on the 1 minute time frame, right? That's not to say that this zone wouldn't hold, but if you actually look, the change of character came from here and not from here. Okay. So yeah, let's just play price forward and see what happens. Okay, cool. We tap in, drop down to the 1 minute time frame. I'll set this up before, but I'll go over it. So on the 1 minute time frame, what are we going to look for now? Well, we're going to want to see the 1 minute actually go bullish. We want to see buyers taking control, right? So this was the last point of supply that put in the most recent low. So we want that to be broken, causing a change of character, right? So what did price do here? Yes, there was liquidity built up here, but nevertheless, we could have still taken a trade if we sweep this liquidity and then seen another change character. Okay, fair enough, we took one loss, but we can scale in again to gain a profit, right? So, oh wow. So we get a low to high, high low, high high. So the change of character came from this sell to buy, right? So I was looking for the zone. Where am I going to put my entry? Well, you want to cover the imbalance. You want to target the area that has imbalance just above it. So I had my entry just here, and to be safe, I put my stop loss just here. Some people would probably put it just below this wick, but I like to be safe, and I'd like to just put it just below this low, right? And like I mentioned before, we're targeting the 4 hour week high. Let me just draw it out. Okay, so what we're playing is we're expecting a higher low and then a higher high to be put in. So we're simply trading the higher low now. The higher low. So what we're going to be targeting, the week high. So we target this here, okay? Because what would happen in this situation? We create a higher high. But we don't want to be greedy, and we want to lock in our profits here. So that is where our take profit would be, right? Back to the 1 minute again. So we've been tagged into this order right here, and now we'll just play price. Okay, cool. So then we get a breaker structure here. Just mark that out. We get a break of structure. There we go. And then we leave behind this zone here. So once this is broke structure and there's no where for price to come back into here, I can go break even on this trade. So I put my stop loss at my entry, meaning that I'm risk free. So no matter what, I haven't lost on this trade. So once I'm risk free on a previous trade, I can then lock in and start looking for other trades. If I couldn't go break even here, then I wouldn't be looking for another trade. Right. So obviously, again, the same thing. I want to put my entry just like below where the imbalance is and my stop loss covering the low. So I've done exactly that. And now we just play price. Okay, cool. We get tagged in. And then we've seen a break of structure here again. But I'm not going to go break even. Why? Because it's left behind this demand zone. There's also this demand zone here as well. So price could come back in and then come back into drawdown just temporarily. Um, so I'm not going to go break even on this trade just yet. Okay, cool. So putting this high, I'd want to see that broken. Wow. Sorry guys, my Wi-Fi is actually shocking. I need to get it sorted. Wow, really? Okay, I'm just going to go to the 10 minute and skip it forward. Okay, on the 1 minute it should show now. Okay, look. Now we've broke this. We've broke this level here. So I can put my stop loss here. Why? Because let's just look at it from a structural point of view. We've pretty much had this low to high, higher low, and then created a higher high. So this low is protected because all that had happened now is a higher low be printed and then a higher high until we meet the weak high on the 4 hour. Okay. So we're risk free on both of these trades now and we've guaranteed profit. It's good to take partials as well because you've locked in some definite profit. What do we see again here? Look, just to show you. Double top. Buy side liquidity. So retail traders may be looking at this and thinking, okay, we've got a double top here. And then what happens? Gets run. So yeah, let me just see quickly before I leave this video as it is. Okay, cool. How long it took for price to get to here? Okay. Okay. 6 hours, right? And what was our risk to reward on these trades? This one a 1 to 27. Let's just round it up, 1 to 28. And then this one a 1 to 18. Okay, so that is 46%. Risking 1%, you would have made 46%, which is incredible in 6 hours. Just to put it into perspective, right? If you had a 10k account, you've just made 4.6 grand in 6 hours. Now, if you step it up a bit and you've got a 100k account, you just made 46 grand in 6 hours. People don't make that in a year. Not a lot, barely anyone makes that in a year. So the power of trading is really crazy. It's literally life changing. So yeah, that was pretty much the trade breakdown. I hope you guys understood that. If you didn't understand it or you've got any questions, be sure to let us know. No question is a stupid question. When I first started trading, I was in a community and I was sort of like, I didn't really want to ask questions because I didn't want to sound stupid or I didn't want to be really wrong. But my mate, he was like, nah, ask questions. Like, no question is a stupid question. And I asked them and I just elevated, I just learned more and more and more. So if you've got any questions, be sure to let us know. Thank you as well for putting in the Discord community what type of video you'd like to see. It's really helped us a lot to be able to provide the content that you want to see. If you want to see more of these, be sure to let me know. Like I said, any questions, be sure to let me or Chapo know. And thanks for joining us once again in a video presented by me and Chapo. Losing my voice there. Can't talk. So yeah, that's it anyway. I hope you guys enjoyed it, and peace.